What's going on, traders? Today's video is really going to be about the power of out of the money options compared to deeply in the money options, the main difference, and how much more money you can be making with the out of the money options for the same price as one that's in the money. And I'll show you really why. All right, so for reference, I am basically in the bottom of mid March 2022, March 23rd of 2020, I meant. When we had a little COVID recession here, went from 340 to 220. I'm going to be showing you like a year out if you were to buy some calls, and I'm going to show you the difference and the power of deeply in the money and deeply out of the money. So here, you can do this as well. I am on Thinkorswim on demand. I love on demand. It lets me back test anything I would like. Um, I was just researching this myself today to see what would happen, and it really does blow my mind because in the beginning, a couple years ago, I was trying to learn about options myself. Everything I was seeing on Discord pages and YouTube videos and forums was saying you want to get in the money options because you see the little column here, the delta is higher. And the delta is basically how much money you'll be getting paid per dollar the stock or whatever you're going to be trading on moves. So SPY moves a dollar and I buy this call option here, I'll make $66. They move 50 cents, I'll make $33. And as they go up, the price of the delta goes up as well. So what I'm going to show you is for day trading, I always buy slightly out of the money, which is the darker. These are in the money, out of the money. I buy out of the money calls, out of the money puts because they're cheaper, one, but the deltas are still decently good. Still anything like above about 40 to 50 is really good. You can see they're much cheaper than anything over here. And if you hold them for a day or a couple hours or a couple minutes, whatever you're doing, if they go up a couple dollars, the delta will go up a lot more. So I'll show you anyways. So for reference, I'm going to be buying, let's go three of these options. This is 25 out of the money, 25th one out of the money. It's $1,700 or almost $1,800. Everything was really expensive there. You could see it was almost $3,000 for an option. This is a year out, so this will be March 19th, 2021 here. So I'm gonna buy three of these. Let me do that. So everything's running here. So it's click here. I'm gonna buy three of them. Actually, I'm gonna go four. Put it on market so I just get filled. Hopefully, I just get filled here. Normally, it fills me instantly. It doesn't look like it. So I'll cancel that, and we'll do one for 1835. I'm actually gonna go check the chart really fast. I'm gonna go to the 20th. Let's go here. Let's see how the chart is. Never mind. Go back to 23rd. Sorry about that. Just checking to make sure I was on the right time frame here. Yeah, that's fine. All right. So we're gonna get three of these, four of them actually. You can do this along with me if you want to open up on demand. I'm on March 2020, 23rd, 10 o'clock. Buying yeah. There we go. There's the price. It's $1,800. So I'm gonna buy four of them. I don't want it limit. I want it market. Okay, so I got filled for four of those at 1673. So I'm just gonna open up my phone calculator here. You can do it as well. I'm just gonna multiply that number by four. So 1673 times four. So I spent 6,692 on call options, four of them. So now I'm gonna buy one equally priced, just one, and it's gonna be really in the money here. So let me go up to 70. All right, so I need to find one that's $6,700. And we'll go one that's even a little higher. This one is 6,900. And a lot of people think the more expensive an option is, the higher the delta, the more money you're going to make. It's more of uh, a newer trader thought, or people that don't trade options. That's what they're going to say. I'll prove you wrong right now. So we're going to buy that. And I spent $6,700 there. So I spent $100 more on that one for just one. And then I spent $6,700 for four of them. You can see my trade price. Multiply this one by 4, just one. And now I'm going to go to their expiration, which is going to be March 19th of 2021. So we're going to go 2021. I'm going to go to the 18th, not the 19th here. And now we're going to let it reload. We're going to see, you can see crazy rebound. This is just a year. Prior to this video, a couple days ago, they were just at like 450, 470, somewhere in there. But now you can see the totals here. We spent almost the exact same amount of money on call options for the same expiration date, but look at how much more money you would have made if you bought more options but cheaper. You would be up $50,000 instead of just $15,000. If you're going anything long term, it is almost always better to buy more out of the money of whatever option you're buying, because as the stock price goes up or down, whichever side you're on, in this case, I want the stock to go up because I'm long. As that goes up, I gotta reload this one on. Let me type in 50 here. I bought oh, I have to go back. Hold on. Let me go back. I'm gonna show you what I mean. Oh, I'll show you here. It just doesn't matter. So you can see the deltas of these call options will go is $42 for one out of the money. $42. And this is going to cost you $131. So you spend $131 and SPY goes up $1, you'll make $41. And now you can see that is when they're at 395. So if they go up again, then you would have be up another $10. You can see how it's basically $10 more. So you would get paid 53 for that one. You wouldn't get paid 42 again. You would get 52. So you get 42 the first time, then the next time you get 52, and then it'd be 62, and it keeps going up until it's around 100. 100 is the max an option can pay you per dollar, but the delta gets exponentially higher as the stock price goes up. They get exponentially higher. So if you buy some that are $2 per dollar they move, and they go up, I don't know, let's say just $100, they will keep increasing in price and get paid more and more and more until, let's just say, it goes to the max. So this is why buying out of the money and out of the money calls for long term, as long as they do go in your favor, are way better than buying one that's already deeply in the money, because the deltas are already at their max value pretty much. They're really close. They don't have room for growth like all these ones. So you're buying something which will appreciate in value a whole lot more, and you can see that in the return right here. And now on my calculator, I'm just going to do the math for your return on your initial money spent here. So again, we spent 16,000, no, not 16,000, 1,673 per option, times that by 4. So $6,692 we spent. And we'll just say we're up 51,000 here. So you take 51,000 in your calculator and you divide it by your initial, what you put in, so 6,692. And that gets you 7.6. And then if you want the percent return, you're going to multiply that by 100. And in this trade, in 1 year, you would make 762% on your money. And then I'll do the same thing for the other option, because we spent basically the same amount of money in this trade, but one pays out a lot more. So 15, I'll call it 16,000 just for a reference here. And then we're going to divide that by 67.33. And there you'd only make 237% on your money. Excuse me. Both of these are really great returns. But why not get something that's going to make you a whole lot more return on your money if you have the option to, right? 50,000 to 16,000. All right. And I'm going to go back here and show you the options just one more time. 23rd. There we go. Anytime there's a lot of volatility in the markets, the option prices will get extremely expensive. Excuse me. My throat's getting dry here. I have to reload the chart again. 49, then I'll do 50. There we go. Oop, that's not what I want. So you can see before they were only $150 and now they're $3,000 because they were moving so much money, $10 here and there, back down here, that you could make a lot more money. So they're gonna make it harder for you to make money, basically. It's with the implied volatility that increases the price. But anyways, you spend a little bit of money and you get a great returns as long as you're buying farther out of the money. And just for reference, one more time, I'm gonna buy one really far out of the money. Let's just see what happens here. Let's see what happens here. $800. I'm gonna do like 8 of them. Let's do 8 of them. And then I'm gonna do one that's just in the money right now. I'm gonna go a year out. It's not gonna get filled, so I'm just gonna cancel that and do one right there. All right. I'm gonna go over. I'm gonna close my other positions so I don't get this mixed up. I'm trying to figure out which ones they were. I know we don't need this one. And then, which one do we just buy here? It's the one that's deep. Yeah, so we don't need this one here. Sell that one. Okay. So, you remember we were 16,000 and then 50,000. Now let's see what happens here. We go a year out to their expiration. Day before, just because they were a little higher then. Let this buffer, let this show us. And oh my God, look at the money increase. It's still around 16,000. And that's 85,000. Let's see how much money I actually spent here in reference to this, because I bought one call for $6,733, because you have to multiply that number by 100. And here I bought 8 at $591. So I spent even less money. I spent $4,728 to make 85 grand. Or you can spend $6,733 to make only a measly $15,700. I hope this really changes your perspective of out of the money calls, out of the money puts. If it goes in your favor, you can make a whole lot more money. And in doing so, it also decreases your risk because you're not putting as much money on the table. Putting more money on the table, if it goes the wrong way, you're increasing your loss. So since there's less money involved, your max loss on this trade again is only $44,728 instead of $6,733. You would be losing basically another $2,000 more for not that much money. As you can see, you'd make so much more money buying out of the money. So hopefully this changes your perspective. Hope you learned something here. Go back test it yourself if you don't believe me. I really find this amazing. I didn't really realize this until yesterday, really, but I felt like I had to share this with everybody else out there. I might be using this in the future. Next recession we get, loading up out of the money calls. All right, I'll see you guys in the next video. Thank you for watching. Make sure to like and subscribe.